Hey everyone, can everyone hear me? Don't know if everyone can hear me. Everyone, can everyone hear me? Yes. Okay. Is there an echo when I speak? Because there's an echo on my end, and I'm not sure if I should be muting this particular microphone. Okay. I think now I understand what the problem is. There's no audio. So what I need to do is mute my speakers. So then I won't hear what is playing here. Now I understand what the problem is. There's no audio. what I need to do is mute my speakers, but then I won't hear what is playing. Okay, I got it. Is there audio now? There should be audio now, right? As if I was just speaking for all that time. There was no audio. It should be working now. Okay, perfect. Okay, I think we can probably get started in like 2 more minutes, but there's an echo. But now I've turned it off, so there really shouldn't be an echo. Why is there an echo? Is there still an echo or is there no more echo? There shouldn't be an echo. Audio is good. Okay, perfect. Thank you, Fabricio. No echo now. All right, excellent. So what I was telling everyone was if you could please just post your questions so I can take a look at them and then just send them through. Doesn't matter how simple or how complicated the questions are, just please post them and I'll do my best to answer everything. So so to start again. So I was just sharing that I'll go through a total market overview and I'll share my views on what I'm seeing with the crypto market, the macro market, the micro market, and then also review some potentially promising projects that we have on our radar. And then I also wanted to just share some, as part of our overview, I wanted to also share some key metrics that I've been tracking on the platform, on our Alpha Hunter platform. And then I also wanted to just showcase the course. So we have our Blockcircle Learn course, which is entirely for free and available and accessible by everyone. We're trying to democratize access to everyone's knowledge to make responsible decisions and not be rug pulled and not be scammed in the space, right? I mean, that's exactly the intent. So we made this course, we pushed it live just recently, and it's in English, but in closed caption subtitles, you can have practically every other language that you could ever imagine. This is a total upgrade and a overhaul of what we did many years ago. So Alex, also aka Crypto Hunter, he mostly created the section 1, section 2, section 3, etc. And he covers technical analysis and off-chain trading strategies, on-chain trading strategies, and then we go through a lot more detail. So we cover, everything. So I'll go through it in more detail, but I'll just wait till everyone starts asking more questions. But and that's really what I wanted to go through. So I know there's a lot more questions on the Discord. Let me see. You're muted. Yeah, I fixed that. And then, yeah. So that's good. I have all the questions I think I need at this point because there's quite a few from last time that I haven't answered yet properly. Okay. So my view on what I'm seeing in the market right now is that we're still range bound. Like we're literally exactly at between 2.36 trillion and 2.56 trillion. And we are mostly more or less where I was thinking we were going to be, which is in this range since like the end of February. And, in around March 9th, March 10th, I issued a pretty stern warning that the market was going to be pulling back and that we were definitely going to experience a pretty significant correction because the market was overheated. Opportunities were saturated. People's greed was like running at a pretty close to all-time high level. And we were way over leveraged. I mean, I think open interest was way over 30 billion, which didn't just break all-time high, but it also it just showed that people were just being extremely biased long. And then that combined with Wikipedia page views were spiking, popularity and search interest for Bitcoin was spiking. All these things were booming, and it was unsustainable. So we've had a pullback, and then we corrected. And now we're going back, down at this point. But this is just one metric. This is just the total market cap. I mean, this in isolation is not useful, right? What's more useful is I think we're heading right towards my dominance target, which was what I've set like 2 years ago, which was around 58 to 62%. And this is Bitcoin's market share. And to me, this one metric alone is so incredibly telling because it just tells you how greedy or fearful the market is. And as Bitcoin dominance rises, then people tend to have a flight to safety, and people tend to go back to the king, right, which is Bitcoin. And I think ultimately there's some safety and there's some solace and some stability that comes with that. And as they do that, they're invariably dumping a lot of their speculative altcoins in favor and support of Bitcoin, and that rises dominance. But that alone is also not useful. It's more useful. A more realistic Bitcoin dominance figure is what I use here, which is Bitcoin dominance excluding the impact of stable coins. So this gives you a truer, more accurate picture of what the Bitcoin dominance actually looks like. And it's useful because it's excluding the noise of USDT, USDC, GUSD, BUSD, which has become more or less irrelevant at this point. But those stable coins continue to extract more and more market share. And as they do that, it's very important to take that into consideration, right? And that's why I like to make sure that the denominator is excluding the market dominance of stablecoins, right? And right now we're at 59%. So my ultimate terminal target range for Bitcoin dominance by itself is 58 to 62. We might even go up to 65, 66. But that's just generally what I'm looking at. It's this sort of red moon, I'm calling it. And it could happen as early as like August, September. It could be, we don't know. But at this point, I mean, we basically broke out of this. We've been in a 2-year uptrend, like literally since October of 2022. Bitcoin dominance has been up to the right and increasing in dominance and increasing in significance. And we finally broke out of that when the market started becoming more and more speculative, right? And you could see that literally around October of 2023, it sort of peaked, and then we just went sideways. Then we rose a little bit, and then again sideways. So now the question is whether or not are we going to rise, or are we? But so far, you can see that the 2-year long-term trend has been up, and we haven't really broken any key multi-week or multi-month support levels. It just continues to trend up. And then this is Heikin-Ashi. So this Heikin-Ashi view, I think, helps quite a bit filter out noise and just improves the, basically the signal to noise ratio. So it's just really helpful. So this is very helpful in its own. And then the other thing is, I would say probably my terminal target zone for Bitcoin dominance, like the true Bitcoin dominance, excluding stable coins, is probably even all the way up to 70 potentially. It just depends, like maybe 62 all the way up to 68, 69. Depends how far we go. But this again has been rising for almost 2 years at this point. So those are metrics that I use, but there's a lot more. So when another one that I use is total 3 USD. So total 3 is basically all total cryptocurrency as a whole, excluding Bitcoin and Ethereum. And also what I've done is I've excluded USDT, which is the largest stablecoin by far. And what this gives me is a number that is probably, I think, emblematic or indicative of the entire altcoin market as much as possible. And then I try to compare that to Bitcoin. And this just tells me at what market cycle are we typically in? Are we basically at a point where should we be bullish alts or should we be bullish Bitcoin at this point, right? And right now you can see where we're at. I mean, we're exactly where we were back in 2020, right? And whether or not we're at the fourth time that we've attempted to break this support line, or we're going to continuing to attempt breaking it, and then we just continue to recover and we just keep hitting it and then eventually break down. But so far, you could see that we've actually broken down right below it. Now, whether or not we close the Heikinashi week below it is, to be determined. But this is very helpful because this tells you that typically when this happens, when you have this massive collapse, altcoins just dissolve and like fade into oblivion. And but they invariably do hit a bottom. Sometimes it doesn't feel like that, but they do hit a bottom, and they ultimately have a pretty healthy bounce, right? And that's what we want to try to ideally time, like a good entry, or try to dynamic cost average in around this time. So this is what I've been waiting for. I've been watching and sharing my thoughts on this for a long time, for like literally multiple years. And we're finally at a point now that this could potentially be the time where we break down and we have a multi-week, maybe 2, 4, 6 week altcoin dump, where Bitcoin dominance rises, alt dominance drops, and the market essentially flushes out the fluff, right, and the excess and the greed. So so those are my thoughts. I'm thinking that's what I'm seeing with this particular metric itself. And then other metrics that I look at is, because those are the questions that I always get, right? Is, what are the main metrics you look at? What is your read on the market? What are some considerations around macroeconomic indicators? What's the health of the US economy? What will the Federal Reserve do? How will that impact liquidity? Is that going to contract or expand the economy? Is that going to contract or expand the stock market? How will that impact equities? Like, dollar coin strength, dollar parity, all those things they're all related. So I want to make sure I answer everyone's questions. So just please keep asking all the questions you have, and then just post them into YouTube or post them through Twitter or Twitch or any system like Discord. I'll make sure I try my best to answer all of them. So that's one metric. Another metric that's very, very important, and honestly, this one metric could potentially be just as important as everything else, is others divided by BTC. So this metric is exceptionally impactful and very important. So what this tracks is all of cryptocurrencies, excluding Bitcoin, Ethereum, Solana, stablecoin, essentially excludes everything in the top 10. Okay. It doesn't include, obviously, the minuscule micro caps and small caps that are 10 million and below, and that have just been issued into circulation, that are trading, and you see them on Dex Screener and Dex Tools and Bird Eye. Like, this is not including a lot of those, but it essentially includes everything that more or less is like in the top 100 to 150. But ultimately, it covers enough, like a sufficient data set, that I would say this metric alone is exceptionally useful. So how I use it is as an altcoin bull and somebody who's very bullish towards that. I want this to be rising, right? I don't want it to be declining like it has been. And that's why I've been monitoring, and I've shared my thoughts on this in the Discord many times, like in the market analysis, where I show, like, I think as concretely as I possibly can, like, this is where I feel like where we are. And this is where I feel like potentially where the market is going to go. And this is like one of the main metrics that I like to track, right? So where we are is that this was actually one of the earliest indicators that we could potentially have a pretty healthy altcoin recovery. Was back in July, it started flipping green, and it went up to this resistance area, and we finally broke above it. Then we had that little impending dump, and then we held support, which is very good. So we broke out of a 2-year downtrend, broke that resistance, hit another level of resistance, declined, and then held support, right? And that's a very good sign that this could potentially lead to a more sustained recovery. And that's what we had. And this was around October. So October 2023 was when I was writing that Bitcoin had like multiple levels of higher level resistance, higher time frame resistance that it needed to crack through before we could say to see a more sustained recovery. And we did, right? So basically, this was very, very good for altcoins, right? So basically, from October all the way to January was really good for altcoins. And then what happened? Bitcoin ETF was issued, and then trading began the next day. And then obviously, altcoins took a hit, as Bitcoin took a hit as well. But Bitcoin was losing at a lower rate than altcoins. So the rate of decline was lower for Bitcoin than the rate of decline for altcoins. So that's why Bitcoin dominance, I think, invariably continues to rise up to my target zone of 58 to 62. So hopefully this is starting to make sense altogether. But then in around March, we started testing this level of support, right? And this is when I started becoming a little more fearful, right? It was around March 9th, March 10th is when I wrote my warning, sharing that that we have to be extremely careful, and then you have to start taking profit and start stacking some satoshis and start stacking some cash and start making sure that you're protecting yourself, And I want to just share what I wrote. So basically, so I wrote this here. So every day I track the digital asset futures and options market, and I can see how stretched we are. And I say we reach all-time high. It's just a matter of time until we experience it. Important to not stretch yourself over and get too enamored with a dog coin or a cat coin, and to make sure you protect your gains. Because at this point, many of our trades were up like 200x. When you're talking about Welsh was up 200x, Omnom was up 300x. Like that's the time to aggressively take profit, protect those gains, and reallocate that capital for a rainy day. I obviously should have sold more than I did, but I'm happy. I'm happy with my positions. I felt very good with what I was buying and holding, and I still feel extremely bullish in the sector. So this is when I could see that there was clear warning signs. And there's like the confluence of all those factors together. It's not just, oh, Bitcoin dominance is rising, Bitcoin USD is rising at a faster rate than altcoin USDs were rising. It was a confluence of like 15 factors, right? And I can go through all of them if anyone has any questions about them. But that's like a very important consideration. I try not to look at things just in isolation. Looking at one metric alone it's an inadequate approach, right? So the others BTC finally broke. Right? And this is when the true altcoin flush. Now, where does that take us? I hope that it takes us to somewhere around here, 0.17, 0.16, and we don't see anything worse than that. I really hope that we hold this 0.16 level because it's just very important. Like historically, we really ideally want to hold this level. And I think it's likely that we're gonna decline until this level. If we don't, it's excellent. I'll be very happy, and I feel like I'm perfectly positioned to profit from that hopeful recovery. But if we do, then it's good for the overall health of the market long term, because I would say that you're flushing out the fluff, you're flushing out the excess, you're flushing out projects that were a non-value add, that didn't have any clear utility, that didn't clearly have any kind of actual functional use, no intrinsic value. They were just sort of propped up on pump and dumps, being shilled, and other, from content creators and influencers who really had no business getting involved in those projects, and projects that really themselves had no reason to exist, right? And a lot of those projects are not going to be able to survive. They don't have sufficient history. They don't have sufficient, reputation. They don't have the right leadership team. They don't have the business acumen and training to be able to get those projects up and running. And those businesses are all they're all disappearing. You could already see that in so many different ways. So those are my metrics. And then other metrics that I like to track is others versus ETH. So this is also like, you really ideally want this to be rising if you want to be bullish altcoins. Like every single time that we've had like a massive boom in the market, we've had others. So the other altcoins other than Bitcoin and Ethereum and Solana. So others again is crypto excluding top 10. You want that to be outperforming Bitcoin, Ethereum, and Solana, right? That's what you want. And if that's not happening, then that means the strength of that particular trend is probably not that strong, you know? Um, and yeah, other metrics I look at is stablecoin dominance. So you, as somebody who is a bull crypto, you don't want stablecoin dominance dropping. You don't want stablecoin dominance rising, but you don't want stablecoin issuance dropping. So this metric itself is tracking the issuance of stablecoins through Circle and through Tether and through DAI. And so this is very important for you to be able to just track issuance versus redemption. So issuance is very good for us for actual stablecoins. So more stablecoins are going into circulation. And redemption is when people are transferring their stablecoins back to the foundation and then they're redeeming it for actual dollars, right? So they're withdrawing that capital. You don't want that. So we obviously want as much cumulative deposits into stablecoins as possible. But what you don't want as an altcoin bull or as a crypto bull is stablecoin dominance rising, right? So this is another factor that started flipping over in March of 2024 is you could see that it started rising, right? And right now it's starting to rise again, right? You could just see a tiny little glimpse, right? That this is starting to rise. And you could start seeing an early indication of it with a higher low on the Heikinashi, but then it was invalidated. And then now again, we have a higher low and a higher high. So potentially this is it. So this is weekly, this is daily. And daily, this is a pretty pronounced, flip of a trend here that we could have. Like pretty strong sustained volume, clear higher high, a clear higher low. Now we just have to see whether or not the weekly is going to close above that level, So those are some of the metrics I use. Another thing about altcoins, the most, I think, fundamentally, intrinsically oriented projects are the layer 1, layer 2 blockchains, because they have clear usage, they have clear demand, they have clear products, they have clear users. And how is it going to be that we're going to have a sustained altcoin market boom if their dominances continue to just sustainably decrease, right? And this is the problem, is that this went up all the way from 35% all the way down to 24%, right? And finally, we've had a recovery, but we're still in this, in this right angle triangle, right? We're still being wedged here. And are we going to continue to collapse? And if we're going to continue to collapse, then that's not healthy for the altcoin market, right? So hopefully we can break through, 'cause every single time that we've tried breaking through here, we don't, right? We continue to be rejected by resistance. So, but eventually we will, right? Eventually we will break through. And when we do, that's the altcoin boom that we've been waiting for, right? That's what we're all hyped up and excited to go after. So that's what I've been looking at. I think, so yeah, so now this is finally starting to rise a little bit, but you can see it's starting to, again, roll back over. And then ETH BTC, of course, like I've spoken about this a million times. Why I like this metric is for multiple reasons. So one thing I love about it is how consistent it's been. So in the past, when you look at how Ethereum is behaving relative to Bitcoin, is it rising or declining in value? Okay. And why is this important? It's because Ethereum is essentially the altcoin king, right? Bitcoin is the crypto king. Ethereum is the altcoin king. And now Solana is the altcoin like prince, I would say. So it's like Bitcoin's king, Ethereum is queen, Solana is the prince, right? And you really want Ethereum and Solana to be outperforming Bitcoin over 1 day, 1 week, 1 month time frame. If it doesn't, then it just sort of flashes warning signs. Flashes, it's an early indication that you should probably be very careful and you should be very aggressive with taking profit. That's why we've said repeatedly take profit, right? You should be aggressively de-risking, use disciplined risk management, continue reducing the size of your positions, and ultimately make sure that you're protecting your gains, right? And that you're not so overexposed to any one particular asset. You don't have like 80% of your positions in some speculative meme coin that some influencer shilled and never mentions again, right? That's what we're trying to like protect each other and help one another. But Ethereum, Bitcoin, in the past, in 2016, it went through this wedge again, through this triangle. Triangular formation has been consistent. Is that you have this downwards high, you have these lower highs, lower lows, you have a part recovery, again, lower high, lower lows, then you have a part recovery, partial recovery, and then you finally have the impending collapse, right? And this during this impending collapse is when altcoins get flushed out. The entire market gets clean, right? So Ethereum, Bitcoin has been such an incredibly reliable indicator of where we are in the market, right? And how aggressive or how conservative we should be. So when we had this, we had like a 50% decline. Then we have a 35% decline. And then this time, when it finally happened, it usually happens around the fourth time. So we have like 1, 2, 3, 4, and then we have the collapse, right? 1, 2, 3, 4. And then this time, the exact same thing. 1, 2, 3, and then finally we have the collapse. But whether or not was this the bottom? Because my target that I had set and that I shared obviously with everyone was 0.045 to 0.35, right? And we hit that. So we basically hit 0.04, right? So we hit the absolute topmost of my bottom terminal range for Ethereum, Bitcoin. And is that the bottom? It's hard to say, but I mean, there's definitely a higher than 25, 30% probability that potentially marked the bottom. And I wrote that could potentially mark the bottom and we could have a pretty healthy multi-week push here. And then we had the Ethereum ETF being approved. Trading hasn't begun, which hopefully it'll start next month. And if all these things happen together and they're all converging in the same direction, then ultimately that could be bullish for us, right? So I'm following this, I'm tracking it. But this metric alone is not as relevant as it used to be. It's becoming less and less significant. Sol BTC, to me, I would argue, has proven to be even more important because Sol has much more strength than Ethereum this market cycle. And if someone disagrees with that and just obsessively fixate on just Bitcoin dominance and Ethereum BTC, then that's their prerogative. I don't have any kind of constructive feedback or criticism on their approach, other than the fact that I don't believe that that's the case. I believe that Solana Bitcoin and Solana ETH and Doge Bitcoin and Doge ETH are comparatively even more important for people who are speculating on micro caps and small caps and mid caps, which is what we do, right? So Crypto Hunter's focus, right? Alex's focus is obviously micro caps and small caps. And my focus has been mostly small caps and mid caps to large caps, but mostly mid to large caps. And now I've been focusing a lot of my time on memes. And the memes, why they're important is just track the data, right? So the majority of memes are operating on Ethereum or Solana now. So you really need Solana to be back to its upward trend, right? Which is what's been happening since late September, early October. But we've broke out of it. It doesn't matter how you draw this. Like the point is that we broke out of it sometime in late March, early April. So we really need to get right back above 0.003, right? And when we get back above that, then I think, you know, things will fire up, and I think we can become a lot more bullish on speculative memes. But until then, we just have to be careful. Like you don't want to be in a position where you are speculating on memes and we're still in this tight rectangular range here. You know, this is just something that I think proceed with caution type of warning. Um, and those are my thoughts on Solana. And then if you have questions, please ask. I know there's a few here, so I'll make sure that everything is answered. But if there's any questions about any positions, about what to do, about how I'm looking at the stock market, how I'm looking at the macroeconomic, health of the United States or of the globe, or like what the Federal Reserve is going to likely do, um, how to farm for airdrops, like anything about that entire space, I can help. Um, so let's see. So Doge. So when I'm looking at Doge Bitcoin, um, doesn't look good, right? I mean, this is the thing. Is right again. Like we hit a little bit of a local top here in March 25th, and then we've just been declining, right? And that's it. So we broke down out of this triangle. So that's not healthy. That's not good. So let's just keep an eye on this. And you want to obviously get out of this downward triangle. You want to be able to break out of it. You don't want to break down below. You want to break above, right? But we didn't. So we just have to keep an eye on this and hope that we hit hopefully a bottom around here. If we don't, then we could easily, no question in my mind, we could absolutely easily go right back down to the 162 level. So that's Doge Bitcoin. Doge ETH, same story. We're right at support. Right at support, exactly right before everything just exploded in March. Are we, is this the bottom? We have to see. Just keep an eye on it. And then Doge Sol. Look at this. Unbelievable. So anybody who argues, says Solana is not strong and it's a VC coin, doesn't matter. I'm just looking at the empirical data and letting the empirical evidence guide my decision making, right? You can have your opinions, but ultimately I'm just letting the data speak for itself. And to me, Dogecoin has underperformed Solana for 4 years. It's unbelievable. Like 4 years, it's underperformed Solana, right? But when it outperforms, it absolutely completely rocks it. I mean, it crushes everything else and it sucks in all the liquidity with it. And with that, it trickles down to all the other speculative memes. And I think memes as an investment narrative have definitely carved out its own market niche much more prominently than it ever has. And I could absolutely see memes be worth 400 or 500 billion, like $500 billion of the market could be propped up and supported by memes themselves, right? And I don't see why SHIB, Doge, Pepe, With, Floki, Bonk, Book of Memes, all of these don't explode up by another 8 to 15x. Like I just, it would be really difficult to debate this with me and convince me otherwise. The power of memetics, like it's you somehow figuring out a way to monetize like an entire social and cultural movement. So to me, memes are fascinating, and I'm particularly interested in these ones, sort of the mid to large cap memes, and then also we have some pretty significant exposure to micro cap and small cap memes, and we've covered most of them. But ultimately, those are my thoughts. So let's go through some questions. So some 5 altcoins. So I would say, so top 5 altcoins right now. And what are some that are potentially interesting? So the ones that I like are the ones in my portfolio. So if you look at what's currently in my portfolio, you'll see that I have Bitcoin, of course. I have USDC stable coins and some cash. Aside from that, that's in a portion of my total equity. I have some Solana because I'm actively trading the momentum trading engine itself. And I have Ethereum, of course. I have Doge. I have Beeble, which is my SocialFi speculative bet. Hasn't done that well because it really had such a limited price history that I think I entered at a sub-opportune, time. But I'm holding, and I'm still feeling just as bullish as I did when I've been buying this like steadily for the last several months. It's like supported by Coinbase Ventures, supported by Samsung. So I don't see how this can't succeed in the long term, but hopefully we'll see. Sheems is one speculative meme coin that I've been very bullish about. It's essentially the canonical first meme coin of Solana, and interesting. So Keyboard Cat is another one. It's just something fun. GigaCat on Base is now officially a community-owned meme coin. So those are the ones I like, but ultimately, those are good ones. So I would say Doge is definitely relatively undervalued. Beeble is good. Sheems is undervalued. I've been buying this and accumulating over the course of multiple months. Woo is a premier exchange. I like it. It could hit above $1.50 at its peak, so it's significantly undervalued relative to its peak, but also relative to a lot of the fundamental projects that they're doing with WooFi and some of their plans with being like a Web3 leader. And then LivePeer, I absolutely love this DeepIn project. I bought this back in 2020 and then sold and then bought more and then sold. And just a big supporter of the initiative. I'm a big supporter of the project itself and what they've accomplished. And then Arweave, I absolutely love it. I've been like an Arweave bull for years. I was very active in many of the communities, and like over the years, things have quieted down a lot now. But Arweave is essentially, it's like decentralized cloud storage, and it's incredible. So I love this. So LivePeer is decentralized streaming. So think of it as like a decentralized YouTube. And then Sandbox and Decentralands are things that I believed in the past, but they're mostly just tiny positions that I have. And then Wax, the same thing. It's like used to be a premier blockchain, but it's tiny now and it's sort of lost relevance. And the same thing with Engine Coin. But yeah, those are some of the positions I like. But the ones that I would definitely speculate on are just ask. So if there's particular positions you like, just ask, and then I can give you my thoughts. But the ones that are consistently and sustainably outperforming Bitcoin, Ethereum, Sol, Doge, right? So those are like my 4 key benchmarks. And if you're consistently outperforming Bitcoin, Ethereum, Solana, and Doge, then you're definitely worth a trade and worth buying. So when I look at SHIB, so SHIB outperforming Bitcoin right now, no, right? It really hasn't been outperforming Bitcoin for a while. Like we had a multi-week push here, but insufficient. So it's not even worth me looking at SHIB Doge, but I know that SHIB Bitcoin is not looking that great. SHIB Doge, same, right? Like we're at a point where we're just going to do a potentially looking at a symmetrical triangle here. And are we going to break out or break down from it? Right? Probably going to break down below it, because how is SHIB going to possibly have strength if Doge itself is losing strength? Well, let's continue, right? We look at SHIB Sol, even worse. So let's look at Pepe. So Pepe has been on an absolute tear. Completely destroyed and outperformed Bitcoin. It's completely destroyed and outperformed ETH. Has it outperformed Doge? Yes. So Pepe could potentially be a good hold, but it's at all-time high. And another concerning point about Pepe is, what are you seeing here on the daily, right? Relative to Doge. Starting to see that it's on a downward trend for 2 weeks now. Is that concerning? A little bit. It's a little bit concerning also that as it hit its peak, it's starting to now also decline against Ethereum. So as the Ethereum news broke out, Pepe has sort of declined. No bueno, right? Not good. However, on the daily Heiken Ashi since last Friday, you could see a slightly higher lows, now a higher high. So maybe if we break out above the 0.01 level here and we consistently outperform ETH and continue to outperform Sol and Doge, then this could be worth a bet. And if I look at WIF, same thing with WIF. WIF has done very good against Bitcoin, Ethereum, Doge, and Solana, but right now it's in a decline. Same thing with Bonk. Bonk did unbelievably well in outperforming Doge. This is why you have to take profit. If you're not taking profit, and what's the point? You have to, materialize these gains into actual, physical, tangible money that you can use and consume and donate and contribute and do whatever you want with the funds. Those are my views. So that's what I'm thinking in terms of altcoins. Now, other questions. So question is, so massive collapse still to come. Is it normal for some of my alts to be 80%? Yeah, absolutely, it's normal, right? That's exactly what I was saying about when you look at Ethereum, Bitcoin, and you look at what's been happening on a weekly basis. I mean, it's just consistent with 2016, consistent with 2020, consistent with 2024. It's like in increments of 4-year periods, you invariably experience a pretty significant altcoin collapse relative to Bitcoin, and when that happens, your alt USDs, right? So your altcoins denominated in US dollars decline at such a rapid rate that it's frightening, right? And we're just at that stage of the cycle. Like it's, I wouldn't be at a point where I'm just going to be dumping altcoins right now. Like if you haven't sold and taken profit, but just be careful, And if there's altcoins that you're very interested in, I would definitely be looking to DCA in into some that are seen promising, like some of the ones that we just talked about. Like look at Pepe, for God's sake. It's outperforming ETH by 10% and Doge by 10%, right? Doing that while Bitcoin and Ethereum are both declined by almost 5%. So that's interesting. And then another thing is, so I think I covered this question. And then I'm working and watching. If I get caught, I'll just get my boys to join us. Okay. So yeah. So questions about, you're asking about crypto mining and the problem. The problem with crypto mining, I mean, I think if you can elaborate and maybe just explain a little more on what you're thinking in terms of the questions, but I know like Green Riot, I know what you're like Hut 8 and all these and all the mining companies. Let's look, right? So if we're looking at Hut 8 and let's look at it on a weekly. I mean, what do you think, right? I mean, look at this. This is not something that's potentially too interesting here, But when you look at, I just want you, the best thing is to just compare this to, let's see, which one do you want me to look at? Green Ride, Clean, Mara. So Mara is the big, huge one. On the weekly, it's been doing good since 2023. So let's see. So this has been doing okay. But still, I still don't find the allure of buying into mining companies that much. Because are these like outperforming Solana? Are they outperforming Bitcoin, Ethereum, Solana, and Doge? If they're not, then I don't see how they would be interesting, So if I'm looking at Nasdaq, Mara divided by Bitcoin, right? So let's do that. Hasn't been underperforming Bitcoin for a long time, right? But this could actually be a potentially interesting time to accumulate it, because you can see it's starting to outperform. It's potentially hit a bottom here. That could be interesting. That could be interesting. Could be like a pretty potentially interesting multi-week speculative trade where maybe you have another push up of 100%. I mean, because it's done it pretty consistently. I mean, it's like every time it hits this level, it goes up. So maybe we see that again. I don't know. This is definitely interesting, Rick. This is very interesting. I think now you're convincing me that potentially we've hit a bottom here relative to Bitcoin. But if we don't hold this level, then easily we can drop back down. So yeah, Mara looks pretty good. Mara looks pretty good. Another thing you could do is go into the stock screener and then focus on the sector that Mara's in, which is technology services. So let's do a sector-based filter on the stock screener, and let's do technology services. And let's look at, I wish it allowed me to actually filter into subsector. This is why we want to build this into the Blockcircle app. So let's do, it's very limited. So I want to do technology services. Give it a second. And then it's not really allowing me to look at, so if I want to look at performance of, no, it's not letting me. Oh yeah, here. So if I want to look at the performance of the last 3 months in technology services, so these are the ones that are hitting 152%, 150. So which one is outperforming everything? Onfo. So Onfolio Holdings. Oh, yes. And then Core Scientific, Iris. These ones could be potentially interesting. Then you want to make sure that they're also outperforming NVIDIA. So let's add NVIDIA here. And let's change the Y scale to percentage. And if we change the Y scale to percentage, then we can actually see whether or not it is consistently outperforming. It is. So AudioEye is interesting. It's been outperforming NVIDIA by a factor of 2, almost a 2x multiple here, where it's done 314% since August of last year, compared to 161% since August of last year. Interesting. So that could be good. This is definitely worth looking at. Let's look at Onfolio. Onfolio is underperformed. Well, let's look at since the beginning of this year. Yeah, NVIDIA's outperformed Onfolio, but Core's underperformed NVIDIA. Iris Energy has underperformed NVIDIA. AudioEye has completely crushed NVIDIA. This is interesting. And then InnoData underperforms. See, NVIDIA is unbelievable. It's way overvalued at 3 trillion. That is unsustainably high. I would be looking to short those types of overly irrationally bought leveraged long positions that people are holding, So hopefully that answers your question, Rick. And then do you think that Wu relative to previous market higher is higher due to dilution? You think that Wu relative to previous market cap is higher due to dilution? Yeah, it's hard to say. I mean, like, the problem with many of these exchange coins is that they've become less and less significant now that they strictly mandate KYC, and they're very they have to adhere to regulatory and compliance rules and regulations. Like even though they're regulated, licensed, and insured, they have to adhere to KYC and AML rules. And it's a double-edged sword. It also makes them like less attractive as potentially investment assets, because the prevalence of decentralized exchanges. So these centralized exchanges are becoming less and less prominent, right? Think of them as less and less prominent and less significant. So those are my thoughts on that. But let's look at Woo. So if I look at Woo, and I want to look at Woo Bitcoin. So let's try to find one. There you go. So this is Woo Bitcoin. This is the thing. This is what I'm concerned about Woo. Like, I absolutely love this exchange. But why? Maybe we've hit a bottom here. Maybe we've hit a bottom here. Couscous. So this could be potentially a bottom, and it could be potentially a good entry buying opportunity. But I just would like to see some recovery here. I want to have some strength. There's no strength. There's declining volume, declining price. There's absolutely no hidden divergence, right? There's no displayed or shown divergence. There's just a straight deterioration of value and a transfer of wealth towards Bitcoin from Woo. So I would want to see some strength here. This is like, so let's look at Woo USDT divided by Binance or CryptoCap ETH. So let's look at Woo versus ETH, right? Same thing. I mean, this has just been, this is not good. Like, this is not good, right? Wait, I'm gonna make sure I did this correctly. I think this needs to be, no, it is correct. Yeah, that's definitely how it's doing. So not something I would be particularly interested in, brother. This is terrible. Which is sad because I really love Woo. And I think they had an amazing opportunity. Let's see where we are. I mean, maybe this is the bottom. Maybe we have a little mini bounce here and we could see how it goes. But hopefully that answers your question, brother. And then you were asking questions about the real world assets. Yeah, I mean, I was investing in real world asset projects for the last 5 years, and no one was talking about them. There was absolutely like no mention of tokenization of assets, and that's just funny. It's just funny until like BlackRock started mentioning RWA and started being really bullish on tokenization of different assets, and then creating all these synthetic token variants, and then like Ondo came, and Ondo became massive. I think Ondo for the most part has done well. But I mean, there's projects like on our watch list, as you've seen, right? You can see that we have basically a lot of projects that are right at the intersection of DPIN and RWA, or are at the intersection of DeFi/RWA. And I would probably use many of those terms interchangeably. So the ones that I like personally is I really like IXSwap. So I absolutely love this project. This project also, Coinbase invested in the project that acquired and owns IXSwap. So inevitably, there's a high likelihood that IXSwap is going to be listed on Coinbase, and that could potentially be like a great opportunity to sell into deep liquid order books with minimum slippage. So those are my thoughts. I mean, IXSwap is excellent. So I love this project. So I'll show you. So I'm not sure if you've seen this project or not, Chris, but this one is excellent. And it's been going up. But just in the last few months, it's actually declined from an 80-cent top, but it exploded from 1 cent to 58 cents. So take that with a grain of salt, right? But this is one project that I've loved for a long time, and it's literally only trading on Uniswap and tier 2 and tier 3 exchanges. It's not trading on any tier one prominent established, regulated, licensed, insured exchange. It's just trading um, on Uniswap primarily. That's where you're seeing the most liquid pools, and I wouldn't be trusting the volume on these tier three, tier four centralized exchanges. And even like a DEX aggregator has limited 7,000. So definitely you're going to be experiencing like extreme slippage here. And look at the order book depth here, like $2,000. A lot of this volume is definitely wash trading, where it's exaggerated. So, but I could absolutely see this hit 5-10x like at market cycle top. There's no question I see this project going up a lot. But I was expecting it to actually decline a little more during this dump, but let's see. Right, so this is what they've been doing. This is what they've been working on, and I think because they have such significant backers and they had good support, I think I think it's worth potentially looking at and considering. You know, so that's one. Another one is Obertech. So Obertech was one project where I was considering the possibility of exploring like an over-the-counter uh, acquisition of some assets here. But this one also exploded. It went from 1 cent all the way to 8 cents, and then now it's just been in a straight decline. They just signed a partnership with the World Bank, and it's pretty significant, but it just didn't materialize into a sustainable run. It seemed just like the interest was just simply not there. And they're some of like the oldest, most established agriculture-oriented RWA coins, and they're focusing on parts of Europe where they're trying to track traceable logs through the supply chain, and really focusing on like the provenance angle. And so this is what they're doing. This is what they're focusing on. Those are projects that I like. What are some other ones? Like I think it's probably good for now. But if you're looking at other ones, I could absolutely look at them for you as well. And then please, if there's other questions, just ask. Okay, so Lee is asking, got to admit I capitulated a few low caps today. It's ridiculous timing, but I'm hoping to get lower entries on some higher conviction projects. Also, had far too many microcaps. I know, I completely understand. We've all capitulated. We've all made mistakes. We've all completely screwed up and didn't buy in at the right time. We sold at the wrong time. I mean, you have no idea. Like I've shared this story like with you all countless times, that I've sold the majority of my ETH in 2016 when I was buying a house, and then I sold even more in 2017, close to market top. So I'm proud of that. But because we had our first son, so like it's just I was at a point where I didn't have a choice. Like I literally sold the vast majority of my ETH in 2016 because I didn't have a choice. I mean, these were forced sells, right? Spot market. It's not like I was leverage trading and like degenning into these coins, right? I was like a stern, strong believer in like the long-term health of Ethereum. And so we've all like screwed up in a million different ways, but like this is why we're here to help each other, right? This is why we have Blockcircle. Is like, even if I end up eventually one day having, hopefully one day, like hundreds of millions, I would still want to contribute and donate the vast majority of that to as many people as I possibly can. And I would always want to have Blockcircle because I feel like it's a family. We're always here to help each other, and it's just amazing. Like it's like every chat is incredible. There's like it's just jam packed with alpha everywhere, and to me that's all I'm looking for. And that insider edge has been so incredibly valuable, and it's also just really good for psychological like therapeutic needs, like when I'm stressed out. So yeah, I think the best thing to do is honestly to just DCA in. That's what I've been doing with like Sheems, for example, is every single time it declines, I buy a little more. I buy a little more, right? So those are my thoughts on that. And then I know you couldn't manage them all. This is the thing is that's why I try to ideally have like 10 to 20 or 30 positions maximum. And then as the market becomes more and more stretched and overheated and overbought, then I converge positions and I try to reduce broad exposure to more concentrated bets. And so it's like it's part of the wealth preservation strategy. And that's what I've learned over the years is to preserve the wealth that you've accumulated through diversified bets. You need to concentrate your capital to higher conviction, higher confident positions. That's why I was so bullish on Bitcoin for so long. And until we started seeing that meme coins were taking off, and I was like, they're clearly carving out a big area for themselves, And then, so Couscous, for some projects, market cap tells you what about unlocks and everything that the price itself don't. Instead of analyzing only the price, do you agree? Absolutely, 100%. This is why I like to use CryptoRank. So CryptoRank, I've been using this site for so long. And it's just awesome now that it's starting to become more and more popular. But this CryptoRank is really helpful to be able to see circulating based market cap versus fully diluted valuation market cap, assuming that all coins are trading and are available for acquisition. And I like to look at, like, people call it float rate. It doesn't matter. Like, I just look at the relationship between circulating market cap and then the fully diluted market cap. And if it's low, that's a red flag. If it's high, that's good, because at least then you know what the actual realistic market reference price is for that asset. Taken into consideration all coins, and it's not just a small slither of tokens in the circulation. It's actually a truly representative sample that it's using. So it absolutely needs to be taken into consideration. That's why when you go to CoinMarketCap and you look at when you change, you customize the view, you can have a fully diluted market cap as well in the view. So if I change it now, and you can see, just calculate very quickly what the ratio is. And they also have, they used to have a like market cap divided by fully diluted market cap, but now they have volume versus market cap, which is also a very good indication of whether or not it's a red flag. But you can see for top 10 are mostly fully diluted, except look at Ripple, just this money-making like machine. And then Toncoin, right, through Telegram. I've always loved Ton blockchain, but I've hated the fact that they only have 50% into circulation. That's concerning to me. And then when I look at same thing for Avalanche, you're almost talking about a little over 50% into circulation. So when you click it, usually you can look at token unlocks and you can look at the tokenomics and the structure of the coins. Usually, let's see if they have some details here. Perfect. So here you can see the token distribution, and you don't want to have high concentration rate with founders and core developers. You want to have the tokens being fairly distributed and shared across a high population. So you have 5% airdrop, 10% strategic partners, to 15% foundations. That's good. This is fine. But 15%, 16% foundation and 20% team and 10% strategic partners is a little concerning. Like, cumulatively, you're talking about a 46, almost 50% of the tokens are controlled directly or indirectly by the Avalanche founding partners / group, right? And then you still have 49% that are yet to be unlocked. And that's definitely going to create a significant amount of cumulative sell pressure, because that supply is so strong. It's so strong. So this unlock schedule, I mean, look at this. So where are we now? So we're, let's say, June 10th, right? Yesterday. We have airdrop 529 billion through strategic partners already. this continues. Look how it just continues to rise. I mean, we're literally, look how high it goes. So I would definitely be tracking these very closely. That's just my wife telling me that she needs to pick up our son. Okay, so any other questions? What's up, brother? Smithy? It's good to see your name, man. Okay. How does Master Vasil feel about tomorrow FOMC? Will it likely be a nothing burger, just like the 4 other FOMCs we had this year, and crypto would largely recover after that? I'll share my views on it. So when you look at the Fed fund market itself, and you look at their funding rate right now, they're basically, let me try to zoom in, make this even bigger. Perfect. So right now they're right at their target reference zone of 5.25 to 5.5, right? What the market economists are pricing in and projecting from a probability standpoint is that tomorrow is invariably going to be a nothing burger, right? As you were saying. In other words, inconsequential, because they're not going to be pivoting and reducing the federal fund rate. And they're not expecting, there's a 91% probability based upon market economic projections, right? This is what they're predicting. The economists are actually forecasting that there's a 91% probability that they're not also not going to pivot in July, and that they're not really realistically going to likely pivot until September. And if they do pivot, it's only going to be by, basically a quarter of a point. Like you're talking about like a pretty inconsequential like pivot, but still, I think it's signaling, by them pivoting, it would be signaling that the market itself is potentially unreliable, unstable, and it's on shaky ground, and that hopefully we've controlled inflation. I don't feel like we've actually sustainably controlled inflation. This is their fear. You could see unemployment just hit 4%, which is concerning. And typically, you don't want an inverted bond yield curve for this long. We've literally have had an inverted bond yield curve for a long time. And usually when this happens, when we're hovering around 2 years, where you have interest rates be higher short term than long term, that's what creates that inverted bond yield curve. Let me show you. That is generally not a healthy indication of the market itself, because that means, and I'll show you, and you can see it conclusively, that means that the market is expecting that there's going to be some recession, right, into the near future. And because of that, this is why let me try to find it here. I have it here somewhere. This. It doesn't matter if you use 2 year or 3 month, but the point is if you look at this on a monthly basis, and you don't want to be below zero, okay? You definitely do not want to be below zero. So let me show you something. Let me try to hide some of this so I think it's fine. So to be able to see the inverted bond yield curve, you'd look at the difference between the 10-year bond minus the 2-year bond. And if the difference is below zero, you invariably have an inverted bond yield curve. You want a healthy bond yield curve should look like a hockey stick, where it's up and shifting and pointing to the right, where people are expecting a long, healthy, stable economy. And with that, they're fine with buying and holding bonds for 5 years, 10 years, 30 years. When you have an inverse of that, then that's not a good indication, right? So this is why every single time, it's unbelievable. It's such a consistent metric to track the rate of recession. 7 out of 7 predictive times, right? Every single time that we've had an inverted bond yield curve, and it then uninverts and renormalizes back to its equilibrium of being above zero, you have a recession, right? I mean, it's like clockwork every single time. So we've had an 853-day inverted bond yield curve here. We recover, recession. Happened again from 1980s, then happened again in the beginning of 80s, then the late 80s, then in the 90s, then you have the dot-com bubble and collapse, then you have the global global recessionary crisis, and then again another recession that we had that was only 2 months long around COVID. So that's concerning. So right now we're on a 600, even more now. I mean, I looked at this 943 days we're close to having an inverted bond yield curve. But let's actually calculate exactly how long. So it's been 760 days. So 2 years we have an inverted bond yield curve. So invariably, when this corrects back up, and when you see unemployment, which is, I think this one, yes. When you see unemployment rising at 4% and above 4%, and you're seeing economic contraction, where the Federal Reserve is continuing to offload and their total balance sheet is continuing to decrease, these are things that are concerning. So let's look at their actual balance sheet, that they've been contracting and reducing the size of their balance sheet by selling and offsetting their positions by over $1 trillion, right? $1.7 trillion they've reduced their total balance sheet over the course of the last 2 years. So they've removed so much liquidity from the market, right? And that's because we have the hyperinflationary conditions that we were in because of the hyper accelerated stimulus that they injected into the market into the form of $7 trillion of money into circulation, right? Now we have to correct, and now we have to reduce, course correct and try to reverse many of the mistakes that we had made, unfortunately. So that's my view on that. And then loads of love to you too, brother. Oh, shut up. Okay. I hope he's still alive. He's still in the group. Yeah, well, a bit of an airdrop nightmare there for a while. And then it's a little overexposed in some positions. But yeah, I think he's still okay. So how would you manage the ample trade? Just hold and keep adding closer to one, sell closer to higher range. I mean, Ample, I've written about this, and I've left a really long, detailed 10-minute message. I want to make sure that you definitely listen to it, because it's right here. So I'm already subscribed to it. But there's a 10-minute message where I speak about it quite a bit, and I share my thoughts on the actual the financial engineering mechanics and the concept behind Ample, and how it works and how it expands and contracts based upon whether or not it's in a hyper expansionary or in a hyper recessionary kind of environment that it's in, and it tries to get to its equilibrium range. And but just let's look at the Ample dashboard. So if I look at the Ample dashboard, and this is how it works. So it tries to get to, so Ample is think of it as a new age stable coin, pseudo stable coin, that tries to contract and expand its supply to account for demand and supply of the market itself, right? And as the price of Ample rises above its target range of $1.13 and $1.25, it then prints more supply to reduce the price down to its target reference zone. And when it's below, it tries to contract the total supply by essentially rebasing, right? It's sort of like a canonical rebasing stablecoin. But what makes it interesting is the market cap continues to rise when it gets to a hyper expansionary phase. And when it's in a hyper expansionary phase is when you want to be holding, because it might go from 100 million to 600 million, or 100 million all the way to 1 billion. And that's what it did in the past. And that's what everybody's banking on, But overall, it's done a very good job of actually more or less staying in its target equilibrium price target range of $1.13 and $1.25. It's continuously adjusting, obviously, and they adjust it every day. So I would say that in the past, and this is what I'm doing. So when I look at AMPL, so let's try to find a good one that gives me the history, though. See, this one's only till, yeah, this is fine. So if I look at daily, just look at traditional, just normal candles. What do you see with this? Right? It's that every time that is hit, that it goes below, and I just shared this yesterday, every time that it goes below like $1 is an excellent time to accumulate. Every time that it goes below $1 is a good time to try to accumulate more and add more to your position. Anytime it goes above, like I would say 120, 140 here, this is a good time to start decreasing your exposure and selling. Because at that point, your supply of that asset is going to contract to account for the fact that the price has gone up by so much from your initial entry of below 1. And you want to be selling. So these are like literally low risk, low bet, high reward, 20, 30, 40% swing trade opportunities. So in other words, let me just draw it out to keep it very simple. These are good times to buy. Good times to buy. Right below $1. Right below $1. Right? Good times to sell above $1.36. There's no reason for you to be holding positions all the way up, hoping that it's going to hit $2.50 again. There's no reason to hold an entire bag of this unless you're looking to hold this long term and you're confident that the market cap is going to explode in a hyper expansionary cycle of the phase, or a phase of the cycle. And that's good to do with some portion of it. But if you're looking to swing trade and you're looking to profit from these 40% moves, I mean, this is pretty clear ping pong swing trade opportunity. So hopefully that answers your question. If it doesn't, please just ask. You're very welcome, brother. You're very welcome. So, Chris, how likely is the Fed will cut the rates this year, and what reaction would you expect? I think if you go back maybe like 15 minutes, you'll see what I shared, but I shared what the probability is based upon prominent established economists, but they've been often wrong, never in doubt. Like my wife always says, like they are often wrong, never in doubt. But ultimately, I think they don't have a choice. They're going to pivot and reduce their federal funding rate and bring it back down once the economy shows that it's been sufficiently destabilized and sufficiently impacted negatively by economic contraction. There hasn't been sufficient, economic like contraction for the Federal Reserve to warrant to want to pivot. Like this is what I was saying is when I look at the metrics themselves, and I look at what people are tracking, there's just not enough contraction. Like people are still spending out the ears, and they're still spending very confidently. We look at like the SPX, look at the S&P 500 index, continues to crush all-time highs, continues to rise since the October break. You look at the NASDAQ, continues to rise, continues to hold support. Look at the Dow Jones, right? Finally having some contraction and some pullback here, but still well over any kind of level that we've ever seen historically. Look at U.S. oil, right? Finally declining, hitting some support. But, so when I look at these recessionary symbols that the National Bureau of Economic Research follows and the Bureau of Labor Statistics, they track these 6 or 7 core metrics, right? So they track like GDP, and then every single time that we've had a recession, which is marked in purple, right? We've had a gross domestic product decline. Usually we'll have 2 successive quarters of declines, and then that marks when a recession actually, in fact, is finished, right? Or at least begins. Depends, but that's usually how it works. Is that's like one of the minimum markers of recessions, um, because when you have two sequential recessionary or two sequential declines in quarterly GDP, then you essentially would mark that as a that's in fact like a recession. But we just had that, and they didn't mark it, right? So it's hard to say. Like that's not by itself is enough. So that's why they look at gross domestic income also. But typically, what you'll see is this starts to decline um, on the weekly. But like, let's look at it on the 3 month. Yeah, 3 month is more accurate. And then let's look at real personal income, right? So do you see? It's not declining yet. It's not declining yet. Every time we've had a recession, you see this declining, right? And it's not declining. It's just continuing to rise. But when you start seeing this top off and roll over is when we want to be careful. And you could almost see that it's starting. So that's one indicator. Another indicator is the payrolls, right? We're right at 272. So really nothing there. And then you look at personal consumption expenditures. People are not spending less. People are spending more than they ever have. All right. It's just like people are spending willy dilly and they have absolutely no reservations or second doubts or any kind of like reservations around like, oh, I want to buy this, I want to buy that. They're acquiring everything and anything in sight. So, and look at the employment level. Starting to finally see a decline here. Finally. So in the past, you have a top, then you have a decline, you have a recession. Top, decline, recession. Top, decline, recession. Top, decline, recession, right? Every single time. Is this the top? Are we in the decline recession time now? I don't know, right? It's difficult to say, but definitely it's a possibility. And then like look at the industrial production. Seems like it's been topping off around 102, 105, right? This is like 1, 2, 3, 4, and let's see if we crack it. So those are the things that I like to look at. Other things that the National Bureau of Economic Research and the labor statistics team looks at is they look at delinquency rates. So this is like rate of default. So how many loans are defaulting? How many loans are declining? And right now, you can see that it's starting to rise, but nowhere near the level of delinquency on all loans that you typically see for all commercial banks in the past with recessions that we've seen in the last 30 years, right? Then you look at consumer loans. This has exploded. From October of 2021, it's gone up by almost 2x, but still nowhere near 4% plus. Then I look at credit card loans. This is also nowhere near like 5%. 4 or 5% is when I would start being careful. Same thing for industrial loans, right? Same thing for real estate. So this is very important. This is very important. Whenever you see a spike in this rate, you have to be extremely careful because you don't want to have delinquency rates on loans that are collateralized by real estate. That's not just, you just don't, it's a big red flag, right? And then single family mortgage delinquency rates, not happening yet. This is like one of the last markers for a recession. It's just not happening yet. It's been declining, And then I look at commercial real estate loans. This is starting to rise since July of last year. So those are my thoughts. And I think when these conditions change and the delinquency and debt rate and economic production rate, unemployment rate, jobless claims, basic all of those conditions happen together, and things are clearly seeing, or the market is showing that the Federal Reserve's contraction is actually having a measurable impact on the market and on liquidity rates and so forth. Then I would project a contraction down, and them hopefully declining it to 5 or 4.75. So hopefully that helps. Yeah. All right. No, no problem. All right. Well, let's see if there's any other questions. If there are, please ask. Do not hesitate. I'm here to help. So again, just ask any questions you have. So don't worry about um, level of difficulty, or if you think it's going to be confusing or anything at all. Ask anything you like. More than happy. And all right. I think that's probably enough for today. I think I've covered everything. Let me see. Let's see if there's some other questions here. Okay, nice. So there's a runes protocol resale happening on Magic Eden. Um, so that could be interesting. And then, okay. All right, guys, let's let's call it a day. And you're very welcome. I mean, it's my pleasure. I'm always here to help. Thank you so much. I will catch you on the next one. All right.